Good morning, Predicted Trades family. I'm going to happily redo prep because I apparently didn't have the sound settings right, and the prep that I pre-recorded and posted was silent. So hopefully everyone can hear me and see my screen all right. Everything looks to be in order on my end. Let's see if I can get this right for once. And let me try and hit all the points that I did in the prep that I already did. So, just looking at ES. Sound check is good. Thank you, Star. So, looking at ES. This is basically the year so far that we've been dealing with. I marked this key level around 45.90. It ended up being what we sold to and bounced. Then once we got through and rejected, it became kind of the ceiling that we reject and reject. That sent us down to another key level I marked around 41.36. You'll notice I do have other key levels, but these two are shaded. That was kind of me marking what is going to be the top for now and what I think will be the bottom, which ended up being a very nice bottom. We got the gap down from the Russian invasion. We wick below it and pop back up to the means. We reject and head back to test it. We bounce again and head back to the mean. Reject, bounce. Here we are back at the mean on ES. So all these zones are still viable, still in play. We could, as we get up to test this zone around 43.50, also be testing the trend line from the highs. You'll notice here, we were testing the trend line right as we tested that key level, and we got a rejection. So now we're about to test a key zone, key level, at a potential trend line rejection. So we'll have to see how things go today and the rest of the week. If we can pop up to get through 43.50, it means getting through the trend line from the highs and puts us on a path to get back to the daily 50, the daily 200, on a journey back to our key zone above. If we go back down, we do also have a range that has been set for the week. If you mark the high here, which we are about to come up and test, which is at this first zone before we get to 43.50, that's the high of the week, and we have the low of the week at our support zone. And this is OPEX week. So can we push and keep going? Yes, absolutely. But could we also reject this week's high and settle back in this zone for a OPEX week? Yes, that is also very possible. So we'll have to see how things go now that we are at the mean. We do have FOMC today. Let me pull up the econ calendar, sorry. We have retail sales at 8:30, so we'll probably see that while we're live, and import price index. And then at 2 we have FOMC today with Powell speaking. I believe this is the meeting where they could announce the first rate hikes. So we'll have to see how the market and big money digests that information when it comes out at 2. We have heard them say that they won't be raising rates hard during something like what we're dealing with this war going on. So it could mean that they don't hike the rates as much as they thought they were when they priced it in last year. It could mean that they raise rates the same way that they were going to regardless of the war, and they don't like that and decide to take us back down from the mean. Now that we've arrived at the mean, we could just see some chop today while we wait for FOMC to come out, and then there will definitely be some interesting trades that happen after FOMC. But if they like the information and we head higher, we must keep in mind that we are up, about half an ATR right now. So we can push more, we can gap and go, but we'll have to see how they digest that data, and we have to wait till 2. So we could just kind of chop around where we are, not really going higher or lower, just kind of setting into a wedge till we get to 2. We'll just have to see. If we start to give out the daily 21, we could head back to the 15, and if we get back to the daily 8, that would kind of be filling the gap and getting back to this 42.60. On NQ, it did kind of overswing its lows, but got right back up. It is not quite back to the daily mean and the week's highs, so we still have a little room to press higher there. But if it can't get through the daily 15 during the cash session and we reject, we can head back to the daily 8 at 13,530, back to yesterday's high, and some of these levels where we topped out midday. On the ready. Let me load up my... There we go. On the ready, we got a bounce at those lows and the daily cloud. We are pulling back up to that 2000 level and the daily mean, so not quite there yet. Whereas ES is at it, NQ is a little below the daily mean, and so is the ready. So let's see if we can get up to that 2000. If the ready rejects there and starts heading back down, it could be a precursor to the rest of the market also heading back down. But if it can get through the daily 21, we still have Friday's highs up at 2044 to deal with, and the daily 50 at 2041. But we could just chop around these daily 8, daily 15, and 21, this little liquidity zone, till FOMC. So something to keep an eye on. And then YM is already to and through the daily 21 and pushing for more. So just as far as relative strength and rotation, YM is through the 21 already and trying to push to recent highs. Last time it tested the 21. It's starting to fire these higher time frame squeezes, this 4 hour to the upside. So let's see if that continues to get us back to these highs and the first Keltner up. And overall, YM is only up 1%, NQ's up almost 2%. So they're all pushing and kind of leading, but YM is kind of ahead of everybody in the race to get back to the mean. So let's see if YM takes a break to head back to the mean. It could mean a rejection of the mean for ES and NQ and ready. Apple. Held this 148, 149 pre-market. Didn't even need to tap 150. Kept on going back to the daily 200. Took a break. Then took off from it. Now we're up to 158 for a, almost 10-point move. Those 155s and 157.5s in the money and providing a great return for today. Apple is above the daily 8. Let's see if it can hold it at this 157.30. We have the daily mean up at 161 and the 15 at 160.70. So let's see if we can hold this gap up and the daily 8 to keep on trucking. If we start to lose the daily 8 and head back to fill the gap, we've got a high around 155.5. Pre-market low around 154, or at least overnight low around 154.60. And this flat Ichimoku back at 152. So if market rejects today and we lose this trend line that's been carrying us up, we could revisit Ichimoku. AMD. Talked about it in prep yesterday. Chips had been down multiple days in a row, but not really heading lower. Basically wedging tighter and tighter at this 100 level. It opens, comes back to fill the gap, but hold the previous day's low. That's a huge sign for a great move that's about to come. So always kind of have to be cognizant of what are the signs for the options I'm trying to play. Talked about pre-market yesterday that we have these squeezes that we were pulling up to pre-market. We could reject and head back down for a bounce to play up, with this big daily squeeze being our support. We open and get this wick down to retest the lows from yesterday in this consolidation. We had a low wick right down in these squeeze clouds. We ultimately hold and start heading back up. Once we go through where we close and then start to head back above that level where we closed, right around 102, that's your sign to get back, or to get in a long, playing up to at least the top of Ichimoku, at least the top of these squeezes. But it ultimately kept going, and now it's back up to the mean. I know these 105s and 107s and 110s all printed all day long. And relative strength wise, when the market took a break and pulled back, AMD and NVIDIA pretty much just stayed up where they were. So, very strong, back up to the highs from Wednesday. So let's see if this gap and go can hold, if we can stay above this 111.71. We can push up to that very key 114.5 where the daily 200 sits, around 115. If we start to lose that 111.60 and start to lose pre-market low, we could go back to fill the gap and get back to 109.33. Any further, we'll probably be going to the Ichimoku. Amazon. Rejected the mean and fell to first Keltner down. Gap up. Came back, filled the gap. Offering you that gift of an entry. I believe the 3100s. Hit beast yesterday and provided a nice return. We're about to open near 3,000. Let's see how this key 3012 goes. We have the daily 50 up at 3050, and this wick right near 3100. If we can gap and keep going. But if we reject, we could go back to fill the gap and retest the daily 21, which aligns with yesterday's highs right at around 2950. So, one thing worth looking at, YM had a nice strong day yesterday, right? You know, little pullback around open, but strong day, up and up. When you start looking at individual names, they don't look like that. You get some pops and some comebacks, and then goes cat. You get some drops and then slow grinds. CRM. You get some drops and slow fades and then a pop. So just to say, now that YM has arrived at the daily mean, you see some rotation going on around the key names in YM. So just something to keep an eye on as they rotate around names while YM has pushed strong to the mean. We could be repositioning to head back down. We could be repositioning as we continue to head up. So just something to keep an eye on. CRM had a nice fade to 210, and that first Keltner up because we are way above the daily mean. Caught a bounce at that first Keltner, and now we're about to open almost at the third Keltner. Third Keltner up can be where we reverse, so we'll have to see if CAT pushes up to 224 and reverses. It could cause YM to start coming back to the daily mean, which would cause ES and NQ to reject the daily mean. So CAT could be a interesting gauge for today if it can't get above this 224. And if it gives out, we'll probably go back to revisit yesterday's high around 216 and this Ichimoku around 214. CRM, not much interest in trading it, but it is back above the Ichimoku, so let's see if it can gap and go to test this 205. If it rejects there, could be a good short back to 200 and the Ichimoku at 195. Facebook. I know a couple of folks hit this yesterday. This dip was pretty awesome gift. Went back and retested yesterday's low and held it like a dog. Great entry long. I know some folks hit that, locked some up, and swung some. So gapping up nicely above the daily 8 at 193. We have the daily 15 at 198. Daily 200 way above at 208. Or daily 21 way above at 208. So let's see, can Facebook continue up to test this wick, which is about where the daily 15 is going to open. On a mission to get to 200. If it rejects, to head back. Or if it starts to go back to fill the gap and can't hold 193, it could accelerate down to 188 in this Ichimoku. Google. Man, Google's been such a catch-up trade lately. It was not looking the prettiest. And then it catches up and comes way back. And if you picked it up off this first Keltner, you're going to open at the mean. Kind of silly. So we have this flat top Ichimoku right back at 2600. Let's see if Google loses the daily 15 around 2625, 2620. It can go back to 2600 to test Ichimoku before heading back up. If we can get a nice gap and go. Got the daily 21 here at 2638. Those recent highs up here near 2700 where the daily 50 sits. And the daily 200 a little further above. So let's see if we gap and go. Staying above 2625 would be nice and bullish. Dropping below that, not good, and heading back. Banks have been in a nice wedge pattern here. And they are gapping out of that wedge and stopping right at these higher time frame squeeze tops, 2 hour, 4 hour. So let's see if this gap out of wedge can hold and carry them up to the mean and through it, or if these squeeze tops and the mean become a rejection, it could be a nice short on banks back to the wedge and Ichimoku below. JP Morgan very similar, gapping out of wedge, top of squeeze near these highs, 21 a little further above, but the 15 probably going to open right at the top of this zone. So if JP Morgan can't get through the 15 in this 135, it could come back, reject this squeeze top, go back to fill the gap, Ichimoku down at 131. MasterCard, ascending wedge, popping out of it at this very key 341.2 level, which cuts right in between the 21 and the 15. So let's see if it can get above this 341, get above the daily mean. They can keep trucking back up to 350. If it rejects around here, could go back to fill the gap, flat Ichimoku right back at 330. Microsoft. Nice and strong from 278, gapping up, 290. Oh, looks like some things are coming back. We just had our retail sales and whatnot. And yeah, number of things coming back. So let's see if these pre-market lows hold, or if we start to come back on this gap. But ultimately at the daily 21. If it loses that and 288 and yesterday's high and pre-market low, we could start to accelerate down to the Ichimoku back at 280, which wouldn't even really be getting back to yesterday's lows. Netflix hasn't really been the strongest to the upside. It's down at the 2 Keltners down when some stuff is already back to the mean. So not a lot of interest here. We are near that key 355, 354 zone that we dealt with last week. And that first Keltner down is there as well. So if Netflix catches a pop, this could be a nice short to come back to Ichimoku if the market turns, but if not, it might be a decent catch-up trade. But overall, it's not been the strongest. You know, popped hard in the morning and then came back and just sat all day. So not a lot of focus there. NVIDIA, super strong day yesterday. Again, opens, comes back to fill the gap, and doesn't even need to retest yesterday's low, and holds this pre-market low. That's your sign, once it gets back over the open, or the close, to go long, get back through open, long back to the Ichimoku, and the daily 8, keeps on trucking. Now we're at the daily 21 and the daily 200, so very key liquidity zone here. Could just chop around here today. You know, we don't have to go higher, we don't have to go lower. We could just sit in this zone all day while folks take profit and reposition and wait for FOMC. So we'll see what we get. We are up about half an ATR already. So let's see if we go back and lose 234. We could go to completely fill the gap and retest the daily 21 and bottom of zone. So yeah, key things to keep an eye out for today on NVIDIA. Qs. Not quite back to the daily 21, starting to reject at the daily 15. So let's see if this trend up can hold and send us back through the 15 and 21 on a mission back to 338 last key big rejection. If we start to lose this trend line and head back, we can head back to 330 and this Ichimoku back down at 326, which is kind of where we consolidated midday. Roku skipping it, not a lot of interest, didn't really move yesterday, shouldn't be playing it. Chop, not a ton of interest either, did move up and nicely with a little gap up. It could keep pushing up to about 590 or 600. At that point, the ruddy will be arriving at the daily mean and could reject. You know, you could draw a trend line from the lows, and if it gives out, we could be heading back to Ichimoku and 550. SPX going to be opening up near 4,300 and near the daily mean in between the 15 and the 21. So could just chop around 4280, 4310 before we break one way or the other. Let's buy. We held this 418, got back above this 419 and a half. Set up a great long back to 426. Now we're gapping up to 431 and a half, key level. Have the high at 433.22. Starting to reject 431, so let's see if we fall back to 428 to catch a bounce to come back and get 431. If we lose 428, we could be heading back to 426, yesterday's highs. Losing that, we're heading back to this zone at 422.23 and the Ichimoku. But if we can hold the mean and try to keep pushing, we do have the next Keltner up at 440. And if you just look at this channel, if we stay in that, you know, we can get to 436. We hit Tesla and VIX and wrap this up. Tesla gave a gift yesterday as well. Opens, goes back to fill the gap, goes back, but holds pre-market low and yesterday's low with a great bounce. That's your sign to go long, especially once you get back over close at 765. It runs straight up from there, and if you look, 765, that next candle comes back to test 765, close of the previous day, and takes off again. So even if you miss this, there's always a chance at catching it at something key. But takes off from 765 straight up to 800, and these squeeze tops, takes a break, then gets through, got our gap up. We've already had some wicks down, and we're starting to fade. So let's see if we can pop back up, get through the daily 15 and pre-market high around 830 to get back up to the daily 21 and daily 200, which are right near 850. If we can't get through pre-market high, we could be headed back to this wick that was down at about 804, which would kind of be filling the gap back to 800. If we start to give that out, we'll be going back to Ichimoku near that 780. And VIX. Yesterday was pretty interesting and key the way we faded. After bouncing off the daily mean, we fade. And we're on a trajectory to tap the daily 8 and 15, which were pretty much right on top of each other. We got through them and then rejected them all day. And since we went down, it drugged the 8 below the 15, so we got a crossover there. What's the gap down? We are right down near 28 with this big key 4-hour squeeze, bottom right near that 28. So VIX will be very key today. If we can stay below 28.79, which we're coming back up to test on this pullback, we can stay below that and get below 28, this gap up can continue to go. If we start to get back above 28.79 and above this overnight high of 29.22, which I'm just going to go ahead and mark real quick for the day, 29.21. We start to break above that, that means most things are going to be rejecting the mean. VIX will head back up to the daily means and this Ichimoku. So we are trapped between 28 and 30, with the mean pretty much right there at 30. So let's see, we could just stay in this range today until FOMC, which could send us in a direction. We all know how FOMC days can be. We might get a nice move in the morning and then chop for hours until FOMC. We could just chop. We could drop and head back and then chop. We'll just have to see what we get. I'm going to size down for the morning and save capital for those interesting post-FOMC trades. All in all, hope that helps. Thanks for tuning in. Good luck today, and we'll see you in the chat.